Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, let's quickly take a look at these precious metals charts. Not so much the gold chart, as gold is still, I guess, hanging up around that 1950 level. It's just been range bound for almost this whole year, minus that one breakdown in Q1, but it's the stocks, the underlying precious metal stocks that I think investors are still really feeling the pain on because, look, it was just a couple weeks ago that we were saying just how oversold the gold stocks were and the silver stocks and how they were due for a bounce. We got a bounce, but it only lasted about a week and a half. And quite frankly, we can go back to that whole bull market argument where the stocks bottom back in September of last year, and they went through, I think it was about 8 months of moves higher, higher lows, higher highs. But then since May, unfortunately, this has arguably turned around. Lower highs, lower lows. So again, that rebound kind of short-lived. And now it almost feels like we're just trending lower and lower in a more painful way. What do you take away from this action here, Jordan, where again, we were moving higher, and now over the last about 4 or 5 months, it seems to have just rolled back over?
Yeah, Corey. I mean, there earlier in the year or earlier in the summer, I mean, there was still some hope. Like I mentioned the last time, you did have legitimate bullish technical signals. Like, you had a bread thrust in the advanced decline line in the spring, and even in I think it was the June bottom, you had a positive divergence there. So you had, and that had only happened 3 or 4 times in the last 6, 7 years, had produced a big rally. So, you had these signals failed, which is kind of worrisome. Looking at the miners in the last week or so, the price action and the technicals are just ugly. I mean, I wish I could try and sugarcoat it a bit, but towards the end of last week or the middle of the week, Wednesday and Friday, you had some pretty ugly candles on the daily chart. So you had some failures, whether you're looking at GDX or GDXJ or SILJ, you had some failures at the 50-day or 200-day moving average. And then when you back out and just look at the price action over the last, 12 months or so, it kind of looks like distribution. I know some people are calling it a head and shoulders, and maybe it is, but it just whatever you want to call it, it just doesn't look good. And so for me, it portends to I don't want to try and predict the future, even though I do that sometimes, but it just portends to some serious risk that there could be a lot more selling here. And I mean, over the weekend, I looked at my breadth indicators, which 3 weeks ago or so, they were really oversold. And they were in the single digits, and we got that rally in August. But again, a couple of days ago, I looked at them, and the percentages of these stocks that were trading above the 20-day, 50-day, and 200-day moving averages, they were at 30%, 25%. So those types of levels where that's when you're in a weak market, like you really need to see single digits to think that it's oversold enough that you're going to get this big rally. And it's the same thing when you look at the COTs as well, the spec positions in gold and silver. Like, yes, they're looking a lot better, but there's still enough speculators left in those markets where if they all sell, it will drive the metals lower. So unfortunately, it's just it's a difficult prognosis here, just because I think it's just going to have to get worse before it gets better. And we can also talk about the macro that's kind of driving that, because I like to look at both things and kind of put them together to form a view.
Well, let's maybe do them in combination, but from the vantage point of, if you see there's potential more room to the downside in the metals based on the COT reports, and in the mining stocks just based on the technical setups and the breadth indicators that you're looking at, a lot of times if the miners are pulling back like that, and if we're getting a weak bounce that we saw at the end of August, to Corey's point, it wasn't much of a bounce really after such a big slog downwards. So if that's the case and we're getting kind of a muted reaction to the upside and there's more downside risk, is there any levels of technical support that you think you would watch, or is there any macro events that you think would turn the tide?
I think it's going to have to be the macro that turns the tide. I mean, as far as technical levels, I was just looking at a long-term chart for GDXJ, and I want to say, 28 looks like really strong support. I mean, you do have some strong support, want to say around 30, 31 perhaps, but, looking at a longer term chart, that 28 to me looks like really strong support. And with respect to the gold price, I would say, you have those long-term moving averages coming into play right around, I think, 1840, 1850. So that's one area to focus on. But, as an aside, I'll mention, and a lot of people know this, precious metals are notorious for overrunning certain support points. So you have to be careful. You have to be careful in a way that, okay, if gold goes below 1850, then that's it. I'm gonna, sell everything. Everything's done, and then it bought, then 1820 becomes a really significant bottom. I mean, we could just go back to 2022 where it lost 1675, but the low was like 1625. So that's how these markets work. That's why I'm kind of less concerned with levels, and I'm more looking at, okay, when are the breadth indicators all going to get below 10%? Looking at that, as well as, what are the net spec positions in single digits as a percentage of open interest. I like looking at those types of things kind of more so than certain levels, but the levels are really important. But the fundamentals are, it has to be something in the macro world, because the issue is, and I think we talked about this like a month or two ago, actually, the issue is that the economy, or the market right now, is almost fully discounted a soft landing in the economy. So even if you think a recession is coming, it's not imminent. So the economy, for the time being, avoided recession. It's kind of strengthened a little bit. I mean, there's still a lot of concerns. I mean, still probably going to have a recession at some point in 2024. But for here and now, the market has discounted a soft landing. So with that, there's a little bit of discounting of inflation starting to turn up. So, that's being driven by oil and energy, which is a late cycle play. So the energy stocks are doing really well. Oil has turned up. The CRB, commodities inflation expectations, those are turning up a little bit. But the problem for precious metals is with respect to the market discounting inflation, it's only discounting it a little bit. And so the market is discounting, well, we've had a little bit of a rebound in growth. There's no recession. We'll get a little bit more inflation. Money's moving out of bonds. So, real interest rates have been moving really high. So these things are pushing money and interest away from precious metals. You're not going to get money and interest coming back into the sector until growth really starts to peter out, or, concerns about inflation really start to increase. And, you have some risks of stagflation. So it's some kind of combination of those things. I mean, it's essentially, we need bad things to happen in the economy for precious metals to do well, be it, rising inflation or, growth turning down. And I think these things, they're on their way at some point, but they're not imminent. And that's the problem for precious metals. And it has been a problem in recent months because the market's been discounting that. The market's discounting no recession. Now inflation's ticking up a little bit. So that means no rate cuts, but also no recession. So that puts precious metals in a really difficult spot until the worries about recession really become front and center again, and inflation is kind of sticky. So then recession, stagflation, then you get that type of narrative going. That's what's really going to help precious metals put in a really significant bottom and turn up for good. But just here and now, we're not there yet.
Jordan, do you think that at least the one commodities sector, resource sector of oil and energy broadly doing better, do you think that has, or at least keeps some investors focused on metals broadly? And if gold does start moving, if things do change, then that money could rotate over more quickly to the precious metals?
Corey, that is a really, really important question, because that's here in the short term, and it's something I was thinking about a couple months ago. That is what I mean in the short, kind of in the next couple months or till the end of the year. That is the key question for precious metals. When will worries about growth and inflation become just worries about inflation, and then the inflation's starting to hurt growth. And so at that point, that would be bullish for precious metals. I mean, I don't know. Maybe it's, the yield curve, it uninverts and it is steepening a little bit, but it's still deeply negative. Maybe it's the point when the yield curve goes back above zero and it's positive and it's steepening for a little while. Maybe that starts to get people, more concerned and then, some of the money starts flowing into gold. But, here and now, in the very short term, I just don't think it's going to help precious metals. I mean, it's something I'm thinking about in my work because clearly at some point, I mean, the bigger picture, there's no soft landing because you have inflation. In a soft landing, you're going to have inflation turning up again, and that's going to really hurt the economy. And they've already jacked rates up so much that they can't really, hike rates that much more. And then they're in a position where inflation is still a problem, but we actually have to cut rates because the economy is heading towards recession. It's just that scenario. I mean, I don't mean to repeat myself, for the third or fourth time, but it's just that's the scenario that's needed for precious metals to really get going. But your question is really important, and so I think my answer to that is you're not going to see that really help precious metals until until the market starts discounting, stagflation more so than just, growth and inflation or reflation.
Well, Jordan, maybe one more question on the mining stocks themselves, just because a lot of people listening to this interview track the metals and they may track what's happening in oil and they may track the general markets, but a lot of them are invested in some of these individual mining stocks, or at least the ETFs. As someone that has a big subscriber base and people probably writing you all the time asking you what they should do, are you tempted to buy some of the optionality plays here with the hopes that longer term that works? Are you tempted to buy some of the drill plays? Do you like some of the ounces in the ground development stories? Or you'd mentioned last week you kind of had an affinity to some of the producers with growth, but are you tempted to buy any of the other sectors that are just so bombed out just for long-term purposes?
No, I'm not. And I'll tell you why. Because when gold really starts to move and when it's going to break out, and we've seen this in the last 20 plus years, when gold's getting ready to break out and it's really close, you can still find many juniors that really haven't moved a whole lot, that have some quality to them, be it silver stocks, be it optionality plays, and some of those things that you're talking about. So for me right now, I would, I'm not buying it because I think there's a risk that we could see more selling and more downside over the next few months. There's that risk. And also I'm not buying because maybe you can, maybe some high quality stocks are going to start to get hit in the next couple months, more so. And, in addition to those, I'm really thinking about, I'm looking at what are the highest quality names out there that have the most upside potential. Those are the things I'm looking. I'm not just necessarily thinking like, oh, well, I'm just going to buy a royalty company that, will go up 3x in the bull market. Like, I'm not interested in that. We're not in this sector to just double or triple our money. We're looking for 5x, 7x, or 10x. So I'm looking at, I want to get those types of gains in a bull market. So I'm looking at, what are the highest quality companies and assets that have that potential at these prices. So I'm kind of singling those out, or at least trying to do so. Again, because I think it's too early and there's still plenty of time where you're going to be able to get into optionality plays and, silver stocks that lag. I mean, yes, if you wait until gold is really close to breaking out, yes, you're not going to be buying those things at the absolute bottom, but they're still going to be really, really cheap. And the reason you should wait on those is, I mean, we don't know. It could take gold another 12 months to break out. I mean, that's not my prediction, but, it doesn't look to me like it's going to break out in the next 2 or 3 months. Maybe I'm wrong and it happens in 4 or 5 months. But, I mean, if you could have thought about this like a year or 2 years ago, you think, yeah, there's no way this is going to keep going on for that much longer. I'm going to buy these optionality plays. Well, then look what happened. So I still think the market really has to prove itself, before you think about, those types of optionality plays and silver plays, which again, these things always lag. And from my own experience, when gold's getting ready to break out, there's still lots of things you can find that are really cheap. So I'd err on the side of quality first and foremost.
Okay, Jordan, not much more to say here, but hey, as always, thank you for sharing your insights on the charts, on the macro, on everything. Wish that we had a bit more of, I guess, of a bullish stance, but you know what? You can't force it, and quite frankly, trying to stay bullish in a market that's going down just ends up losing your money. So, again, very thought-provoking and comments that I appreciate. So, Jordan, thank you again for your time. We'll chat in another couple weeks. I hope you have a great rest of your week.